There's a whole lot of different opinions in the property market at the moment, which we're going to get to deep in this video today. We're going to talk to the fear. We're going to talk about what the big banks are saying, the Reserve Bank's saying. We're going to talk about what some of Australia's and the world's leading analysts and economists are saying about what's yet to come, so that you can either sit out of it or potentially get in and take advantage of the current dip in property prices Australia-wide right now. So if you're confused at the moment, so am I. I've got some people saying that property markets in the next 2-3 years could go up by as much as 30 to 40%. Got other people saying that the property market in the next 12 months could fall right off the cliff. So what are some of the predictions you're seeing, Simon, from the biggest analysts and the biggest banks in Australia?
So talking about ANZ, they're predicting an 18% fall in property prices in 2022 and 2023. So not too sure where their indications are year on year, but that's a pretty decent decline Australia-wide. CBA is looking at about a 15% decline peak to trough Australia-wide. They are actually saying that it's mostly going to be felt in Sydney and Melbourne, which most of these guys are saying, but still big declines there predicted from CBA. NAB's come out indicating an 18% decline from peak to trough as well, so a little bit higher than where CBA's at. Westpac indicating 6% decline in 2022 and an 8% decline in 2023 before bouncing back towards the end of next year.
So some big predictions there, bro, around some negative stuff. Now, as you said, there's two important things to highlight there. One, according to all of these banks, the majority of that, because Sydney and Melbourne represent 70% of the Australian housing market, is going to be there. These markets have gone up 100% in the last 10 years. They went absolutely feral in 2021, and we're getting that natural pullback at the moment. But the big thing is the Reserve Bank, CBA, and all of these other majors are saying once we do get to trough or bottom, then we're actually expecting a really strong bounce back as well. So that's important to note as interest rates stabilize, inflation stabilizes, and we start to actually see interest rates potentially decline according to the Reserve Bank as well.
Yeah, these are all short-term, 12-month, 2-year sort of predictions. But then when you look at people like Simon Priestley and Phil Anderson and what they're indicating could potentially happen over the next 4 to 5 years, Simon Priestley's come out and publicly saying that he believes some property markets around Australia could go up another 30 to potentially 100% over the next 4 years from early 2022, which is absolutely huge. And then Phil Anderson is also indicating that some property markets around the world could go up another 40 to potentially 80% as well. Now, they're not just plucking those numbers out of the air. That is based on a long-term historic averages around the world and around Australia. So, I think short-term things are looking a little bit scary, but long-term, as always with property, it's looking pretty good.
One of the things that I wanted to point out, which I think is interesting, is between 2002 and 2008, was it? According to Simon Priestley's article and also another one by CoreLogic, interest rates went up something like 22 times over those 6 years, from about a 3.5-4% retail rate up to a 7 to 9% retail rate. And in 6 of Australia's 8 capital markets or capital city markets, property prices actually doubled. So just be wary of some of the sensationalist media, including our YouTube title today, around house prices falling off an absolute cliff. There was another article by CoreLogic on their Instagram page, which I thought was amazing. They looked at 30 years of house price growth in every capital city in Australia. And over the last 30 years, it's been 450%, which is averaged, when you divide that out, at 15% per annum, which is insane. It's not going to happen again. We all know that, but property is a leading asset class globally and a store of value against inflation. And I think, it'll be interesting to see where some of these markets are at in 15 years from today and what this temporary dip means for that long term.
And what we're finding in the current market, we're fortunate enough to buy anywhere from sort of 2 to 4 properties every single week, sometimes even more than that. So we keep a really good finger on the pulse. And what we've noticed is that it does take a little while for the numbers to realize the reality within the market at any given time. And what we're finding right now for a lot of our clients that are looking to invest for the long term is they're pricing in about a 5 to sometimes 10% decline on the way in. So they're already getting these potential discounts on the way in right now. So it'll be interesting to see how that 12 months plays out with the market conditions currently versus the data.
You know, I love that, bro, because there's a great line, and every stock trader in the world knows this. If it's in the media, it's in the price. Now, everybody knows that interest rates have been going to go up for the last year, and now we understand that. The futures markets have priced that. Everybody understands that prices in Sydney and Melbourne are coming down. Whether they end up dropping top to bottom by 8% or 15% like they did back in 2017, early 18 is yet to be seen. But the market understands that. And I think in Sydney and Melbourne, if you're a savvy investor, you can already get your 10 to 15% decline today. And like you just said, like every property that we've bought in the last month has been somewhere below 5 to 15% below. So it's already in the price. And why I want to explain that is if you decide to sit out of the market, which is completely cool, and for a lot of people, that is absolutely what they should do, then just don't think in a year or two's time when you statistically see the 15 or the 8% decline that discount when everybody comes back will still be available, because based on history, it won't be.
And I think a really important thing to talk about as well is the expectations of the Reserve Bank of Australia with this interest rate rising environment, because the RBA, along with all of the major banks, are indicating that they're rising interest rates rapidly to curb inflation. And the target cash rate at the moment is about 2.6%. And they believe once they get to that level, they'll be able to hold interest rates steady for a period of time. And all of these guys, including the RBA, are predicting that interest rates will begin to decline in the second half of 2023. Now, once this comes through the media, once the media is no longer talking about interest rates rising and they're saying that interest rates have hit the peak, the confidence will start to come back into the market as well, because people will now know where the RBA is actually going to be taking the cash rate. So that will build a little bit more confidence there too.
You know, I love that, man. And in the Reserve Bank and the Commonwealth Bank's meeting notes at the moment, there's 3 scenarios that could play out. One, it doesn't work, like it's not in America, and they'll break what they're telling us at the moment and what they're talking about behind closed doors, and they'll just keep increasing rates. That's one scenario if they can't get inflation under control. The next one is things stabilize. People can afford this higher rate because wages go up a little bit and it just holds at that cash rate. But the most likely at the moment, according to the Reserve Bank, CBA, and every other major bank, is that once they get inflation under control and it's stable and people's spending's under control, they'll actually pull them back. Now, the last thing I wanted to round out this video with is the longer term view, which I know that from here, 100 years ago to now has looked good. You know, about 11% per annum Australia-wide, according to John Lindemann. I know according to the Homely article, in the last 50 years, it's also looked like that. Sydney, Melbourne, Brisbane, Perth have all done more than 9% per annum over that period. Now we've got CoreLogic's data this morning. 30 years has looked like that. An average of 15% on houses in the capital cities in the last 30 years. We know in the last 20 years, almost every capital city has done more than 7% per year as well. So the long term is what Simon and I are most focused on. And while it looks linear on paper, this is what the last 100 years looked like. This is what the next 100 years will look like as well. There'll be times when your property in a capital city like Sydney could drop by as much as 15 to 30% in a given couple of year period. And there's periods like last year where you saw Sydney and Melbourne prices go up by almost 30% in a calendar year in some suburbs. So if you're going to ride the sentiment wave and the hype wave, it is scary always. It's either boom or bust. But if you're more of like a 15 to 30 year investor like Simon and I and like our clients are, then dips and sentiment opportunities like this one can be a great buying opportunity. And for many others, it can be a great thing to watch. And then in the future, like look back at and see what you want to do next time that opportunity comes around. For those of you who love this stuff, whether it's going good or bad or in between, we really appreciate you watching this today. Please subscribe to our YouTube channel if you haven't done it. Please share this with someone who's either freaking out or overly confident at the moment, just to give them a different perspective. And in reality, here at Pumped On Property, we're always trying to understand what the big dogs are saying and then bring you the best information at the right time so that you can make smarter decisions. You can sometimes stay out of the market and protect yourself, or sometimes take advantage of it. But either way, we did another video recently based on Phil Anderson's book, The Secret Life of Real Estate and Banking, and Fred Harrison's work, which he wrote, The Power and the Land. Both of these guys looked at 250 to 350 years of booms and busts, and we recorded a video titled The 18.6 Year Real Estate Cycle Explained. Both of these guys don't expect a major crash anytime soon, so that'd be a great one to go have a look at as well. But either way, we wish you all the best moving forward, and thank you so much for coming and taking a look at our stuff today.
That's a wrap.
That's a wrap.
Getting cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. That's so nice, eh? Oh.